Good evening and welcome to the Market Wrap. It was a historic high-octane trading session on Dalal Street today, June 15, 2026, as the Nifty 50 blasted out of the gates with an aggressive gap up to open at 23,984.25. Fueled by massive global risk on sentiment following the historic US-Iran peace agreement, the index immediately conquered the monumental 24,000 milestone, printing a lifetime high of 24,011 for DE in the very first minute of trade, while the collapse in global crude oil prices below $84 a barrel sent rate sensitive financial, auto and realty stocks surging. Unexpected domestic wholesale inflation data, heating up to 9.68%, triggered sharp institutional profit booking in the afternoon. This distribution wave dragged the index down to a session low of 23,817.8C, before a minor short covering recovery allowed the Nifty to ultimately settle the day with a robust gain of nearly 1%, closing out the session at 23,856.55. From a market structure perspective, the broader trend remains constructively bullish as the index continues to trade well above the recent 5-session average. However, today's candle reflects profit booking after an extended move, with sellers successfully defending the 24,000 region. The close near 23,857 places the market in a short-term decision zone, where follow-through in either direction could determine the next swing. The session can be interpreted as a distribution candle within an ongoing uptrend, rather than a confirmed trend reversal. Analyst commentary for tomorrow's trading session. The market is expected to remain in a decision zone, with 23,900 acting as the key pivot level for the session. A bullish setup becomes active only if Nifty sustains acceptance above the 23,900-20,910 region. Such a move would indicate that buyers have regained short-term control, opening the possibility for an advance towards the first objective near 23,960, followed by the major resistance around 24,110. The bullish view remains valid as long as price does not fall below the structural invalidation level of 23,820. On the downside, a bearish setup comes into play only if the index breaks and sustains below the 23,810-23,820 support zone. Acceptance below this area would suggest that profit booking is expanding and sellers are taking control, with the first downside objective placed near 23,780 and a broader target around 20,620. Any recovery back above 23,900 would invalidate this bearish structure. For short-term intraday participants, a scalping opportunity may emerge if the market finds support in the 23,895-23,900 zone and shows a clear rejection of lower prices. In such a case, a tight risk can be maintained below 2380 while looking for a quick move towards 23,925. Overall, the 23,820-23,900 range should be treated as a balance area where patience is preferred over aggressive positioning. Traders may wait for confirmed acceptance above resistance or confirmed breakdown below support before deploying larger positions, as trading inside this zone may lead to unnecessary whipsaws.